Hey, folks, how you doing? It's Wednesday. Wow. Yes, Wednesday. Wow time. Can you believe it? It is, the 18th of December. Holy cow, December 18th, 2024 means we got literally less than 2 weeks now left in this year. And, yeah, 2 weeks from now is already 2025. Unbelievable. So, what exactly is happening in the fun and wild and wacky wide world of everyone's favorite orange coin? Well, if you have not been looking at my videos recently, if you didn't notice, right, 2 days ago, on Monday, before the traditional market reopened after the weekend, I told you, don't be surprised to see a little dip and then a pump. Well, what did it do? Did a little dip in the run up to traditional market open, just like I told you it would, and then it pumped on traditional market open. How did I know that? I don't have a crystal ball, I swear. I just literally looked at the VEPS information, and that's what it was indicating. So that's what it was naturally going to do with the majority or the propensity of the probabilities, okay? The bulk of the probabilities were indicating that it would have a little bit of a move down and then a move back up. Why? Well, it had to test certain areas, which it did. You know, there's a reason we have daily ranges and weekly ranges and monthly ranges on the VRE chart. It's not an accident. Those areas are very strong areas to test. They're very strong price magnets, right? It's not an accident that those areas are very strong price magnets and that they get routinely tested, right? Happens like clockwork. Not because we wanted to do that. No. Because that is where the volatility ranges tend to go, right? And that's what drives the returns there. Since the volatility is the standard deviation of the returns, the price action just follows them. That's all it does. Price action follows returns, right? So that is natural to see the price action do those things, which is why it wasn't a surprise to see the price dip on Monday before traditional market open and then pump. Test for what? Your new test for okay, so price action, those little candles you see on charts, if you look at a price chart, okay, if you look at like tradingview.com, right, that's like a site where you can look at the charts of any asset that's on any market practically, right? And if you look at those little sticks on the page, they're called price action candles, right, or price candles. Well, that price action is lagging information, meaning it's information that's derived from other information, right? It's presented to you as if it's the latest and most important information. What's the price right now of the asset? But the price of the asset is derived from the returns, right? The returns are your returns on investment. Meaning if you put $100 into a stock or whatever, and then at the end of the year, it's worth $110, then your returns are 10%. Okay, it could be at the end of a year, it could be at the end of a week, it could be at the end of a day, it doesn't matter, it could be at the end of an hour. Okay? Your returns are the percentage of profit or loss that you make on your investment. That's called the returns on investment. Now, the standard deviation of returns, if you remember, if you ever took statistics class, either in school or college, right? In statistics class, you might remember the bell curve. You might remember the bell curve not even from statistics class, just from, your teacher might have graded your tests on a bell curve, right? On a curve. That's what that curve is. It's called the normal distribution curve. Okay. And if you ever got a grade on the normal distribution curve and your teacher bumped up your grade or bumped down your grade as a result of where you were on the curve, right? That's because the teacher was fidgeting with the normal distribution curve. But in trading, you don't fidget with that curve. It just is what it is. And that standard deviation, that curve, right, that parabolic curve, that's called the standard deviation, right, or ST-dev for short. I don't know, it's not really short when you say it, but when you write it, it is. That standard deviation is also known as volatility. Why? Because it's the standard deviation of returns, right? Now, it could be, you could have standard deviations of anything, but in trading, the standard deviation of returns on investment specifically is volatility. That's what it is, okay? Now, by the way, you can have other forms of volatility. For example, at Laplace, at Alpha Trading, we created the Laplace volatility indicator, which is similar to our standard deviation of returns or volatility indicator, okay? So, in fact, I think we're the first one that ever did that. So we made, just like our historical volatility indicator, we made one that uses the Laplace distribution model. Laplace was a French mathematician. If you don't know about him, Google him or join our Discord, learn for free. You can see all about him there. Brilliant man. And he figured out another distribution model, which is also incredibly accurate, and it's why we like to use it. We use both Laplace and normal at Alpha Trading. Now, there are other distribution models beyond that. Yes, we do know what they are. Yes, we have certainly used them, but those are the ones we typically find to be the most accurate for trading, for the simple reason that those are the models that are used largely by the huge algorithms that are developed and managed and maintained by the big quant shops, like quantitative algorithm software developer shops like D.E. Shaw and plenty of others, and big trading houses, right, like Citadel. Those are high frequency trading firms. There's no shortage. If you want to know about those, again, come into our Discord or go to our website. You'll see it. Yeah, and by the way, if you want to go to our website, it's just alphatradinghq.com. You can find the link to the Discord there. You can see all kinds of info on there. So, and that is what I mean when I say, what is that? And that's what I say when I'm saying testing, right? We're testing volatility ranges, okay? So, like a 68.3 probability area, 95.5 probability area, 99.7 probability area. If you're new to this might sound like space alien language to you, but basically like a 68.3 probability area is a standard deviation of returns, or the first Laplace distribution. They both are 68.3%. And they are basically saying that there's a 68.3%, the price action will not close above or below the standard deviation parabola, okay? The 95.5 will say that there's a 95.5% probability that it won't close beyond this parabola. And the 99.7% probability says it won't close beyond this parabola, upside or downside, okay? That it will be contained within that. And then, of course, there's the mean that goes through it. So if you want to get technical about it, you could divide those numbers in half. Half of that number is to the upside, half of that number is to the downside in each of those cases, right? Or any of those cases. And there are, of course, many other probabilities, right? There's not just 68.3, 95.5, and 99.7. It just so happens that those are three very powerful areas because they are first, second, and third standard deviation areas, and they are first, second, and third Laplace distribution areas. And that makes them very powerful For the simple reason that you got to remember, even the most complicated algorithms are built by humans still, even if AIs are helping to write the code, but they're not really. It's still humans who have to oversee that and QA it and everything. And they're managed by humans, okay? Not managed by bots yet. They're still managed by humans, okay? Yes, bots run the trades. No human can run millions of trades per second. The bots run the trades, and they do run millions of trades per second, but the humans manage them, okay? So they make sure that they're managing the profit and loss, okay? They make sure that if something's going down significantly, they have their eye on it, and they can tell the bot, hey, this might not be working as well as we thought. Maybe switch that up. Oh, look at that. Some of my favorite doggies. Hello, Boca or. Hey, Coda. Hey, buddy. Hello.
יש לו משהו בגב, אני לא
Oh,
רוצה
no.
שיעבור ל-Q.
Okay. All right.
ואולי זה מדבק. אז
Okay. All right.
שמתי לו תחבושת.
He's a beautiful boy.
מה עם Q?
No, he's okay. He's just, anyway.
Bye-bye.
Yeah. All right. I'll talk to you later. See you. One of my favorite dogs right there. Big old St. Bernard, just like I have. In fact, it's his half brother. What was this saying? AI can't be any smarter than the smartest human expert in any area, but it's absolutely, AI is not smarter than the smartest humans in any area. First of all, who created the AIs? Right? Still people who created them, right? Even if AIs are now creating other AIs, they were created by people, and they're only, at the moment, still capable of learning what they are informed about, which is stuff that is created by people. Now, can they compute faster than people? Well, there's some things they can compute faster than people, but there's some things that they can't. For example, anyway, I don't want to get too sidetracked into that. That's a whole other discussion, but I'd love to have that discussion. If you want to join me in another discussion about it, I'll go deep into that. But yeah, AI is incredibly powerful and incredibly helpful, but we are still the ones in control for now, okay? So don't go to sleep if you're not the person who wrote that. If you're someone else, don't go to sleep panicking, thinking tomorrow you're going to wake up in a robot-controlled world that's going to be like a cyber hell or something. Nah, we're a long, long way from there, okay? Pitchforks and fire torches will always be humanity's simple methods to counteract high-tech overreach. As Luddite as that sounds, don't be surprised if there's an anti-droid revolution at some point. But anyway, back to trading. So a standard deviation of returns, right? One standard deviation of returns, as I explained, forms a volatility range, right? Where the returns can run in, and the price action will follow it up and down. And what Bitcoin did on Monday, which it does every day, by the way, was move within the various standard deviation ranges. And there are different standard deviation ranges, of course, for every single time frame that you're looking at and every single candle that you look at, right? The beauty of our tools is that they are automatically updated. You don't have to sit there and draw them every day. No, every day the lines are repainted automatically, or are drawn automatically according to the math, not according to us. We don't sit there with our pen tool and draw lines on the chart. That would be absolutely nonsense. Okay. Hello, I see you, Rosa. Hello, Rosa. So what is it going to do today? Well, by the way, what did it do yesterday? Right, it went up to the 108 area, and then what did it do? And I was literally telling people to do this during the live stream, right? I reminded people, right? If it goes up to that area, take your damn profits, right? Why? Well, because where's it at now? Last I looked about a half hour ago, it was like 103,000 and change. That's a $5,000 move, right? That's like several percent of a drop. Why? Because people took their profits. Okay, 5% profit on a move is very nice. Now, overall, the asset still remains in mean reversion on the 30-12 RMLR on the daily time frame, and that RMLR is in the $120,000 range and rising over the coming 30 days. Okay, but that doesn't mean that it can only go up, and I've explained that. In fact, yesterday I told you during this live stream here, I told whoever was watching, don't be surprised to see down days. It could happen today, could happen tomorrow, could happen whenever. Sure enough, it happened today. Right? Like within the last, whatever it was, 8 hours or so. Right? The price came down very nicely. Why? Again, people took their profits. How did I know it would come down? How did I know it would be likely to come down? Because when you have a significant run up that goes beyond the standard deviations of returns, and the asset has distributed far away from the mean of returns, then there's really only one thing it's going to do next. There's only one thing that assets do when they're not distributing away from the means of returns. And the one thing that they do is they mean revert. That's all they do. Right? Assets either mean revert or assets distribute. That's all they do. They distribute away from the mean of returns, and then they mean revert to the mean of returns. That's it. It's very simple. It's not complicated. Okay. So look for assets to distribute. Look for assets to mean revert. How can you tell when they're doing that? Well, again, we have tools that give you that power, that give you that information ahead of time when they're doing that. So you're not caught with your trade stuck in the wind without a clue. Okay, you'll know exactly when it's doing that because it says it very clearly. It shows it very clearly. What is the VEPs? Again, it's volatility, entropy. Probably is free, right? So who else is giving you free information? So do that, right? Join our Discord, get the free volatility starter kit, learn all the free information that we have available, which is plentiful, right? More than most people actually can handle. And if and when you're ready to try our non-free tools, you can try our premium tools for free. And we have a free 2-week trial period. You don't have to put in any payment information or credit card or send Bitcoins or nothing. It's completely free. You just ask for the 2-week free trial. We give you 2 weeks access for free. And then after that, if you want to actually sign up, we are a fan of creating additional use cases for crypto. And that's why we accept crypto for people who actually want our tools. It's very simple. And if you've never used crypto before, it's very easy. You can use a credit card to buy it, or PayPal or whatever. There's a million ways you can do it now. Anyway, so that's that. By the way, also if you need to tutoring, we actually do offer tutoring, like private tutoring. Most people don't need it, but some people do, and that's because if you want to get up to speed faster by having one-on-one sessions with a tutor, or one of our co-founders will actually tutor you, right? It's not just some random person we pick off the street. No, it's one of the people that created Alpha Trading. When we say co-founders, we don't give away the title of co-founder to people who just want to buy in or something. No. One of the actual 6 people, it's only 6 of us, who created Alpha Trading, and it's usually just a couple of us who do the actual tutoring, but all of us are capable of it. And that's it. I'm not selling anything. I'm just telling you that's if people want tutoring for learning how to trade with our tools, they can do that. Do you want to have cheaper selling fees if you want to buy crypto to transfer to Joe Block? We don't sell crypto. Right? We sell it on exchanges when we're trading. Right? We trade crypto. We buy and sell all the time on exchanges, just like anybody else who's trading. But we don't sell crypto to people. It's not like we have an exchange where you come to our exchange and buy crypto. If you want to get crypto, go to any decent exchange where you can buy, crypto, any trusted exchange where you can buy crypto and buy it. Or if you know people who own some that are people you actually trust, maybe you could buy it from them. It depends on who they are. But generally speaking, the easiest way is just to go on a site. I'm not advertising or showing any of them, but there's tons of them. You just coin. Excuse me. Coinbase or Kraken or Bybit or Binance. There's tons of sites like that all over the world. There's tons of decentralized exchanges where you can go and get crypto and practically any amount that you can conceive of. And if you need huge amounts, obviously, then you go to over-the-counter desks, right? And many of these same exchanges I just mentioned, they have over-the-counter desks. In fact, they all do, and many more do as well. And that is where you can buy large amounts, like thousands and thousands of Bitcoins at once, for example, without affecting the price on the market, because you get like a fixed price on the purchase, and it's not an order that goes on the open books, which means it doesn't affect the market price. Right? That's what you mean. You buy 200 pounds worth every 2 weeks because 220. Yeah, right. So there's always going to be fees if you're just buying like straight DCA purchases from your exchange. So the way to lower those fees, is to look for places that have lower fees, and one of the ways to do that is to buy them through decentralized exchanges, meaning you're buying peer-to-peer from people. Okay, so if you go on, if you use like BISQ, BISQ, okay, for example, someone like me as well, but I'm not, like I use BISQ, right? I buy and I sell on BISQ, right? Because I like BISQ. It's great. It's been around forever. It's a decentralized exchange. It runs, on your computer. You don't have to be connected to their website or anything like that. And it's just for Bitcoin purchases, right, or sales, right? And I just buy and sell Bitcoin with whoever wants to buy and sell it, right? And it's a decentralized exchange, meaning there is no middleman. To me, that's better, because that's kind of like the ethos of Bitcoin, is to be a peer-to-peer mechanism, a peer-to-peer network, a peer-to-peer form of currency, a peer-to-peer form of, sending values across, from peer-to-peer without censorship. And decentralized exchanges allow that, right? Centralized exchanges are not without censorship. They do control your ability to send money, right? If you send your money to, or if you buy from Coinbase, technically speaking, they own that crypto until you move it into your own private wallet. Okay, I guess I must have phased out there anyway. This is we're leading off into a bit of a rabbit hole here. I just wanted to let you guys know about Bitcoin, what it's likely to do today. It is likely to follow the VEPs again today. Hang on, you're easily saying that, but if you're exchanging 10 persons worth, it's cheaper and you can give the cheaper fees. Sorry, learning. I buy every 2 weeks. Fantastic that you DCA, you dollar cost average. I hope if you're buying the same amount every 2 weeks, it's called dollar cost averaging, and you buy it regardless of what the price is, up or down. Technically speaking, for most retail investors, statisticians have demonstrated, right? Like professional statisticians have demonstrated that is the most sure way over the long term to earn a nice return. And if you're buying a decent asset, right, that has a generally positive return on investment. So way to go. If you have a huge amount of money, like millions or billions of dollars, you should buy to pay for it. That's hilarious, bro. You remind me of people that bought on Silk Road or other places, and they spend thousands and thousands of Bitcoin like every month on there. Just imagine how ridiculously wealthy they'd be right now if they had just kept some of those Bitcoins. And yeah, anyway, but in any case, if you are buying to invest and you just buy and stack and buy and stack, that is considered the smarter way by cautious investors and all that. But I'm not a financial advisor. I'm not an investment advisor. I just tell people, ways, information about trading, okay, which is low time frame trading. No, just what they ask for, you transfer third party. Right, I guess, I don't know. I don't do that, man. Like the only reason I collect any amount of crypto ever is just for the future, like I don't even, to me, it doesn't exist. Okay. I use it. Yes, I use it to pay for things in real life. But the amount that whatever I invest, whatever amount, maybe it's pennies a year, maybe it's a few bucks a year, maybe it's gajillions of dollars a year, right? But it doesn't matter how much. It's nobody's business. Let's just say it's pennies a year. Okay. I put it in a sock drawer and I don't look at it again, or I put it in, some secure place and I never look at it again. Okay. Because it's not for me. When I'm investing in something like that, it's not for me. It's for generations after me. Okay. That's the whole point. It's like planting trees, right? We don't plant trees for ourselves. We plant trees like this lemon tree that I'm standing next to. Okay. The person that planted it didn't plant it for themselves. They planted it for the generations to come that would be able to enjoy the fruit. Yes, I understand. Just trying to get cheaper fees all the while. Just going through live view popped up. All right, cool, man. Well, I'm glad I popped up. If you want to learn about trading, by all means, stick around. I'm glad you're here. And you can learn about volatility. You can learn about Bitcoin. You can learn about all kinds of assets. I don't only talk about Bitcoin, and I talk about many different kinds of crypto. Litecoin, by the way, fantastic crypto in my opinion, highly underrated. Solana, also very good. There's tons of cryptos actually that I really like, and there's tons of traditional assets that I like. But all of them I trade using the same system, which is volatility, entropy, probabilities, and statistics, what we call the VEPs. And yeah, so if you are not a trader, well, then, okay, maybe you like something else I talk about on this channel. I talk about current events, I talk about marketing, I talk about branding, I talk about business, but I talk a lot about crypto and trading as well. And maybe you have friends who like it. Why not? Tell them. I hear the algorithm likes when you share. They want air orm at the moment. I don't know what that is. I don't know what's ear. You mean Ethereum? Was that what Ethereum? Do you mean Ethereum? Anyway, guys, I got to get going. I hope you all have a fantastic day. Keep in mind, the VEPS is going to tell you what it's going to do. Now, look, after the dip that it had today, no, that's okay. Ethereum is a weird word to spell. After the nice little dip we had today, people taking their profits, keep an eye on the daily volatility ranges. Has it tested the central daily volatility range? Has it tested the weekly? I've been telling you guys from the start of the week, this thing's got to test the weekly, right? Did it? If you don't know, come into the Discord. Go watch our latest live streams. The one from yesterday. The link is posted in the Discord, in the YT streams or something like that. And just go look at the live streams channel. What about UFOs? Yeah, sure. I love UFOs. They're fantastic. We can talk about that. No problem. I got some deep insights about that. But no, this video is about Bitcoin and trading. And yeah, no, there's no loose nukes in New Jersey. Check out the Ryan McBeth video if you don't know who that guy is. He talks about very interesting stuff. He knows a lot about drones. Knows a bunch about Intel, and he made an interesting video actually debunking the whole nukes in New Jersey nonsense. Okay, and he's not some left-wing whatever conspiracy guy or extreme right-wing conspiracy. Hopefully not ex-Royal Irish. Ryan McBeth, look him up. He's a brilliant analyst of Intel and knows about drones a lot. Actually, he works with drones. So anyway, guys, I'll talk to you later. Have a great day. And happy trading and or whatever you're doing. And that's it. Talk to you guys later. Say cheers.